Hey, yep. Hey, Rick.
Now we're going. How are you?
Good. Are you, sir?
Can't complain. Can't complain. So we are live on YouTube with our Friday update. We're trying a different format here using StreamYard instead of Zoom. So we're hoping all systems are go, and we've launched. So every Friday at 3 o'clock, we update what's going on in the market. So let me roll off some quick real estate inventory numbers that I just pulled up. And normally on Fridays, Pat, we always see available inventory go up by 200 or 300 units leading into the weekend. We went up by 8 after coming down.
That's amazing.
Week. So we're below 12,000 units. In fact, let me check here real quick. I believe the number is something like 11,500 units. Yeah, 11,526. So that's pretty low. So for the week, though, we had 3,032 new listings, which for the week was 300 higher than last week. But the rate that we sold them under contract was $43.99. So we're still putting about 1,000 more under contract than what came on. And what helped keep the inventory level is 933 people put their houses back on the market. That's been hovering around 300 to 400 maybe. So word's getting out that real estate's getting better and they're putting their homes back on the market, but not fast enough to increase the supply.
That's amazing.
So it's now today had the big announcement is this great job growth. And I'm kind of a cynic, but I mean, when you've been laid off and now your place opens up and you get to come back, I'm just not going to count that as jobs added. 2.5 million. And they're all excited because unemployment's only 16% now. Here comes the recovery. I may be wrong, but I go out and eat in a restaurant and there's me and maybe 15 other people in a restaurant that holds, 90.
Yeah, no, I agree. There's, like you said, they're kind of getting jobs back that they lost, but we're here is the mark up here, the mark that was down here. Now we've come up a little bit, but there's still a gap. There's still a gap, obviously, with the, there's 2.5 million jobs gained, but they're expecting almost 8 million jobs to be lost. So I think it's probably playing into that W recovery because there's enthusiasm to say that, hey, things are really looking good. I agree with you. I mean, I'm positive, but then there's always a cynic behind me saying that, there's we're probably the end of the first quarter, beginning of the second quarter in this whole thing.
Yeah. And I'm also kind of concerned over all the glee that I see. I follow a lot of YouTubers. A lot of them are millennials, stuff like, yes, we're getting more stimulus. And it's like, guys, this is your money.
Yeah.
The government can only spend what they take because they don't produce. So this is, oh, good. Hey, we're going to get $2,000 a month. We're going to get that's not good. Yeah. The economy is in a situation where we're essentially borrowing from ourselves to pay ourselves now. That's not good. And when you see 3 trillion going through as the new package to go out to support the economy, that's not anything to get really excited about.
Well, like you said this week, I mean, obviously the savings rates with this money, people are saving this money versus using it to stimulate the economy. So, I think it's just money that they're throwing out there that is just kind of, it's not you being used appropriately.
Well, there were some good numbers that are good for people. People are being smart with this money. So the money went out and they want it to be stimulus. So they want you to go shopping. They want you to get on with your business and stuff. Well, guess what smart Americans did? They saved the money. The savings rate went up by 33% and credit scores have improved the past 60 days.
Maybe people are taking our advice as far as the last, the credit repair.
Yeah.
Doing their credit repair.
Well, they got these checks. They paid off some credit cards, so it's So now that's why when you hear, well, we want to look at the data, why there's a delay in what type of stimulus program to come out with. They don't want to continue the extra $600 a month because now you lose the incentive to go to work. So they're looking at paying you a bonus to go to work. But they want programs that give you money so that you can go back to consuming. And they don't really want to push a bunch of money out there and just see it because, we're a consumer driven economy. And so unless we start spending money, we're going to be in the doldrums. But, and it's really depressing in the area where I live because, at 6 o'clock at night, I see the National Guard parked at the Chandler Mall and police everywhere and barricades, like big military barricades at the mall. And the curfew is over at 8 o'clock at night. But the curfew says that you can operate your business at regular business hours, but everybody decided to close at 6, to send their employees home.
Yeah.
And so it's really been I hope it's over this Sunday and this nonsense goes away because this is no way to live. So
I think the curfew, I think that people are taking this curfew. I mean, I even went to the gym on the last couple of nights and, as a matter of fact, I went to the gym last night at 6 o'clock and I walked out at about 10 to 8. 5 to 8 just to go home. I wasn't really worried about the curfew, but the gym was just about 90% cleared out.
Yeah.
So I think people are taking this, curfew serious. So I think that's obviously had, short term, I think Arizona is one of the few states that really has a statewide curfew.
Yeah.
If I'm not mistaken. So,
but yeah, that's unusual. I'm glad I went to Prescott last weekend instead of this weekend because I got to sit out in the patio and enjoy the weather and have a cocktail. So let's talk rates for a second. If the unemployment numbers keep improving at a decent velocity, do you think we'll see some pressure on rates or will it matter?
Yeah, we saw today. I mean, the numbers came out today and just looking at my software program that I track rates on. And, the 30-year mortgage-backed security market was down 12 basis points. It was down initially almost 30 basis points, which is actually a pretty good hit to the mortgage-backed security market. When the prices go down, yields go up. So the 10-year treasury was at 0.89, and so what I was seeing today was that there were great numbers. The mortgage-backed security market got hit. And but then it started coming back to saying, okay, these numbers are good, but they're still the way the market's been trading is that rates, they're not going to be running away from us. I mean, they could have really run away from us today. I mean, if the mortgage-backed security market would have been down there was one day a couple months ago where it was down like 80, 90 basis. I mean, it was just a bloodbath. That was in the early March. And if you look at the last 45 days, I don't know if I can't turn my camera around. Can I, or
no, I wouldn't be able to see it. No,
but it's been relatively flat. The Feds have been going in and buying it. So rates have been very, very flat. I mean, we saw a little where they went up a little bit today, but overall it was kind of the way they were trading. It was like, it was good news, but we're not going to let, rates are not going to get ahead of us. So, I mean, basically that's impacted, refinances are strong. People are out there looking. I just saw something, obviously they said despite the massive, unemployment, triggered by this pandemic, I've seen some statements saying that there hasn't been that much of an impact on, as you've said through the numbers, it hasn't been that much of an impact on supply or demand. It's been basically just kind of like, it's really surprised us both. Even though, lenders are tightening, where I think it's going to hit, this pandemic is going to hit is the lower income first-time home buyer that, maybe their down payment assistance programs, because they really tighten those with the credit scores. So the lower end, which is sad, it's sad, but I think that'll eventually come back. But that's going to be the one that comes back the last. I mean, the people have got jobs, they got credit. They're out there buying. It's been amazing. It's been absolutely, I mean, I haven't seen, on the, on the guideline standpoint, lenders are, like I said, last week I said they started to loosen up. I haven't seen anything too much this week. It's been pretty much status quo, but we've been busy from a mortgage standpoint. It's been all systems go, which
well, I'm
really
seeing
just
a lot of buyers making comments, on my site and they're on a, it's email and they're saying, well, I'm going to wait and see what happens. And I'm thinking, well, how do you know when you've seen what happens? What does wait mean? Are you waiting for all of a sudden houses are going to take off and you go, okay, now I'm getting in? Or are you waiting for something that tells you that they're going to crash? Because if you're thinking about selling and you're waiting, I don't get that, because they're selling now and there's nothing out there. So what are you waiting for if you're thinking of selling? Now buying, I can understand there's nervousness. I would wait because I would want to see if I'm going to have a job in, before Christmas, before the last quarter for people. So I completely understand buyers sitting back and waiting, but there's buyers that are very confident in their jobs that I also understand why they're purchasing now as well, because rates are so low. But I don't understand now if people that are thinking of selling the house, what they're waiting for. Does that make sense?
Yeah. Because
I'd list tomorrow.
Yeah. I mean, if you're this time frame is really going to weed out the serious buyers and the serious sellers, because just an excuse to say, well, I'm going to wait and see what happens. Like I said, in 30 years I've been in finance, you're not, there's never going to be one number that hits you in the head, say, all right, today I've got to sell. It's on a case by case basis. I mean, obviously we're going to go into this market now. We're in June, and with the school situation, this is the time frame that we get a lot of people that change school districts or have to, they move because they want to get into this. Now, obviously with this COVID thing, people, it's going to probably throw a little bit of more of a wrench in, I don't know if it will or not, but usually June and July people are moving around because of their kids. They got, they want to get in settled before school. So that's always been a big time frame for people, first time, for buying the home buying season. So, I mean, I'm still sitting there amazed looking at, the forbearances. I didn't see really the numbers for the forbearances. I didn't see the exact number. They didn't report. I couldn't see a number reported, but they have come down. So, I mean,
Yeah, I saw a headline that said that it's really slowed.
Yeah. And we saw that chart last week that we provided that they've come down drastically. So I think those forbearances were obviously people just buckling down the hatches just in case. So, our first Zoom call, we were obviously really concerned about forbearances turning into foreclosures, but it's really that whole, data trend psychology timeline is, I think people are just doing it just in case, and they're going to protect their equity.
Well, last week, I know we were looking at numbers that going into the weekend, our inventory was sitting at 12,322. And now we're at 11,526. So about 800 fewer homes on the market. And we'll lose about 300 of those coming through Saturday and Sunday. And then Monday, that's going to be down to almost, I think, a flat 11,000 units, which is an all-time low.
Yeah.
And so
like I said, the normal market is 30 to 40,000 homes.
Yeah. So it's a you can't help but have a bidding war in the 350,000 range.
Yeah.
So, but if you're qualified and prepared, jump in. But I mean, I did have a client reach out to me this week, and they said that they're not sure if they want to list their townhome now. They may wait. They don't have to sell it before they buy another house, but what do I think? And I said, if you're thinking about selling, I'd sell now, because you can only sell on what you know was going on today. And today we know it will sell, and we know that you have no competition. I don't know what the end of the summer is going to look like. So that's what I know today. And I see that number for being a seller is getting better every weekend. But the main numbers haven't come out yet in real estate, Pat. The unemployment numbers have. So the average person out there doesn't know that houses are selling like crazy.
Yeah.
They will.
30-day delay.
Then that 11,000 could end up being, 15,000. And they'll be all townhomes.
Yeah.
I'm getting out.
Exactly.
So, well, cool. Well, look, next week I am going to be in Forks, Washington. You know where that is?
Mm-hmm. No, I know, but I'll say, just.
Do you ever watch the Twilight movies?
Yeah.
The teenagers, the vampires. So that's where that movie was based out of, even though a camera never set foot in Forks. But a friend of mine is buying a house on 2.5 acres on the Salduck River, and he's going to turn it into a vacation rental. And he's going to retire there in about 2-3 years. So I'm going up to help him get it ready to turn into a vacation property. So I'll be broadcasting from there next Friday if we have a decent bandwidth. And
good to hear.
And I've already checked the weather. It will be raining.
And it'll be hot here. So
yeah. So it'll be refreshing. So
yeah. So bottom line is to sum up on my end, basically the guidelines pretty much are, they're holding steady, nothing crazy coming out of any lenders. Just as usual. I mean, market's been strong. Rates are still, mid threes. If you do a buy down, low threes, but it's been interesting. All systems go on this end. Like I said, nothing. I think things are calming down a little bit. I think the first couple of weeks of COVID and all this forbearance stuff, we were all shaking our heads, but it seems like the dust is settling just a bit. But like you said, there's probably still maybe there's second wave of, wait till June, July, August, September, see what, happens. Like you mentioned that a couple conference calls before. I think that'll be the telltale sign. August, September, October, really to see how it goes through all this stuff goes through the system.
Yeah. It's going to be very interesting. I don't expect any shocking news next week. I'm going to predict that we're going to come really close to being below 11,000 units on Monday morning.
Yep.
That's my prediction. And we'll see what happens next week. So,
yeah. And I guess the other theme for this week is why don't we just be nice to each other? Smile at the grocery store, open up a door.
Saying nasty stuff on
330 million people could just be accountable to their own lives and just, I know that everybody's got different stories and stuff like that, but if we could just be accountable to our own, treat people like the way you want to be treated, things will be fine.
Yeah, start opening doors for people. Be nice.
Yeah, exactly. Smile. A smile goes a long way.
See you, Pat.
All right, buddy. Take care.